ARU is one of the most interesting critical minerals plays on the ASX because it sits at the intersection of strategy, scarcity, and execution. This isn't a drill and hope explorer. This is a long-life NdPr project with real government attention, real strategic interest, and a product the world actually needs. The entire business revolves around the Nolans Project in the Northern Territory, a large, long-life rare earths deposit designed to produce separated NdPr oxide for EV motors, wind turbines, robotics, and defense systems. With China dominating global supply, Western governments want alternative sources, and ARU is positioned right in that gap. Management is a major strength here. ARU's leadership team isn't built on hype, it's built on project delivery. They've got engineering depth, operational experience, and strong government relations capability. That matters when your project requires multi-billion-dollar funding, export credit support, and long-term offtake agreements. This is a board that understands how to take a complex project from study to construction to production, not a team learning on the job. Financially, ARU is still pre-revenue, so the balance sheet is all about runway and funding strategy. Nolans is a capex-heavy build, and the company's future hinges on staged financing, government support, and strategic partners. They've already attracted interest from multiple jurisdictions because NdPr is a national security commodity. That's why ARU keeps appearing in critical minerals programs and export credit discussions. The market knows the project is strategic, it's just waiting for the funding to lock in. Where the product sits today, Nolans is essentially shovel-ready. Approvals are in place, engineering is advanced, and the flow sheet is defined. ARU isn't planning to sell concentrate, they're planning to produce separated NdPr oxide, which positions them deeper in the value chain and gives them higher margins. That's rare for an ASX small cap and a big reason governments are paying attention. The future of the company is binary but powerful. If full funding lands and construction begins, ARU transitions from a speculative developer into a strategic supplier with multi-decade cash flow potential. If funding drags, the share price chops sideways. If NdPr prices run ARU re-rates. If offtake agreements land, momentum returns. This is a catalyst-driven stock with long-term upside if execution aligns. Now the chart, because fundamentals tell the story but price tells the truth. ARU is coiling in a tight consolidation range. Support sits around 14.5s. Mid-range is 16C. The breakout level is 17.5C. The major breakout zone is 20C, both psychological and structural. Above that, the chart opens to 23C, 26C, and 30C. Below 14.5C with volume in the structure breaks. What stands out is the compression, lower wicks, declining volatility, and volume drying up. That's classic accumulation before expansion. Catalysts that can trigger the breakout include finalized offtake agreements, government funding updates, rare earth price moves, project development milestones, or strategic partner announcements. ARU is the type of stock that can sit still for weeks and then move 20-40% in a single session when news hits. Risks are real funding requirements, construction delays, commodity price volatility, and sentiment swings. That's why the trade is mechanical. Breakout above 17.5C with volume is the momentum trigger. Break below 14.5C and it's no trade. No emotion. No guessing. ARU is coiled. The fundamentals are real. The management team is experienced. The project is strategic. And the breakout level is obvious. If it pops, it could run hard. If it fails, we step aside. That's trading. If you got value from this ARU breakdown, hit like and subscribe. It supports the channel and helps build a community of traders who want clean, honest ASX small cap analysis. Trader to trader insights. Stay sharp, stay disciplined.